So the first word in this question is vice. It's not important to know for the CPA exam, but if you know your movies, there's a movie that was called Miami Vice, and that's what I thought of when I saw this word. So let's pretend we're down on the beach in South Beach, Miami, right? What a great place to practice a multiple choice question. So it says that Vice, they purchased 5,000 shares of common stock in Green Company on June 30th, year 5, for $30 per share. So we need to think about, okay, because they have 4% ownership, it's an equity security, right? Because it's common stock. Well, they'll likely use the fair value method and go ahead and report any unrealized gains or losses directly to the income statement, right? Not other comprehensive income. And when we dip down to the last sentence, that's what it's asking about. What amount of unrealized gain or loss should they report related to this investment? Now, it tells us on November 25th, year 5, Green paid a cash dividend of $2 per share. Well, this is probably a non-liquidating dividend. It doesn't say anything about the company being liquidated, right? So that $2 cash dividend, that's going to dividend income, but it's not going to impact the unrealized gain or loss on the investment. So we can go ahead and ignore that. So now we're at the end of the year. It's December 31st, year 5. Unfortunately, the market value per share has decreased to $25, right? Everybody that invested in it during the year is going, what the heck happened here? I thought this was a sound investment. I thought it was going straight to the moon, but it did not. It decreased. Now, it only decreased $5, but we own 5,000 shares. So when we do the math, well, we purchased the stock in June for $150,000. And now the market value at December 31st, year 5 is only $125,000. Well, unfortunately, that means Vice incurred an unrealized loss of $25,000. And that's what they're going to report in their income statement. Right? So the correct answer here is going to be unrealized loss of $25,000. Now, like any good CPA candidate that's studying for FAR, we should be thinking about what's the journal entry here, right? That would have answered the question as well if we said, okay, if we know the journal entry, we can get this question right because that's what it's asking about. Well, we'll go ahead and debit unrealized loss for $25,000, and then we'll credit the investment in Green for $25,000. This is going to reduce the net carrying amount of this investment on the balance sheet, and then we're also going to record that unrealized loss on this investment in the income statement, which is reducing net income, right? So not a great result for the company Vice. They probably wish they would have not purchased the stock at $30 per share, but guess what? It's only unrealized, and like everybody says, it's not an actual loss until you sell it. So maybe the price will go back up in year 6.